Let's see if everything's working right today. Yesterday I had a microphone. The microphone I just got that works for a whole 3 or 4 weeks went kaput. Trying to do a little video with Logan yesterday. Man, a lot more people jumping in early. That's pretty cool. I was thinking about doing this actually like super early on Saturday mornings since my new internet service provider seems to really super get congested during kind of the peak hours. So like after everybody's off work or when kids are home on the weekend all playing video games and watching TV, it really sucks. What are you guys doing today? It's like super super cloudy and rainy and everything else here in Seattle. So not a lot of playing outside today. Oh, sounds like I just got a package delivered. You guys hear me fine? Oh, actually I didn't check. Let me see. Let me make sure. Yep, looks like this mic's working. All things point to things are working. Oh, New Jersey, man. I need to go to our East Coast so badly. I've never been. I've been out of the country. I've been to several countries. And the farthest east I've gone is Atlanta one time in a layover. But besides that, only, where else did I go? I went to New Orleans, which is my favorite place in the United States I've been to so far. And then I've done like South Dakota, North Dakota, but anything east of there, and I gotta go. Like we have so much history on the East Coast that I really, really want to see it. Yeah. This thing just keeps telling me that the stream health is not good, but I'll bet the audio eventually comes through. Hopefully it doesn't like buffer super bad, but that's all I want to do a little bit earlier today, and then next week I think I'll try to just like get up super early. I know for you guys on the East Coast, probably not a big deal. If it starts like buffering super bad, let me know, and I'll just let's see. Let me see if there's any settings I can change. I do have like the ultra low latency just because I want to be able to respond to the chat in a decent amount of time. Because if it's on the regular one, it's like the first time I did it, it's like 20 seconds between like interaction or 30 seconds or something like that. So try to have a back and forth and then somebody's answering the question 30 seconds later. So I haven't had a chance to go through any of the comments and stuff just like the last couple days, so I want to take a look at those real quick unless you guys have anything you specifically wanted to ask about or talk about today. I'll go grab my comments section. Friday actually I think we ended up okay too. Yeah, I'll throw the ROBINHOOD up there. You guys see what plays I'm in. There we go. Up 87 cents. Must be some Dogecoin profits today. Holy smokes. Alright, I'm going to throw this up on here. I actually do want to talk, we'll talk a little bit about this. This actually kind of sparked a decent conversation yesterday. Unfortunately, I didn't get to jump on there and reply at all. But I actually like stuff that like kind of calls me out a little bit and makes me, you know, either I get to defend myself, ignore it, or I get to really talk through it. And I enjoy talking through it, like as long as nobody's hostile, you know, totally 100%. You can say I'm totally wrong about stuff. I'm wrong all the time. have no problem admitting it. If I thought I was right all the time, I'd really be an idiot. Um, but Spider Cart, first time I seen him on there. Bro, what the hell are you talking about? If you have 10 million in capital gains, then you get taxed on that 10 million. You don't have to sell additional stock to cover it. You also don't get capital gains taxed unless you sell stock anyway. So your equity stock raised by 10 million, but you don't sell, the no tax to pay, my guy. So that's kind of right, but kind of also wrong. I don't think anybody who trades, or even like us, small traders, it's not like we just, I mean, unless we put it all in like Neo or Doge, like all in and all out, and then all of a sudden we just have like one capital gains. Most of us are like in and out of the market, and we're buying, selling, buying, selling, buying, selling. So if we have $10 million capital gains, that's probably a lot of transactions. And then at the end of the day, like your portfolio, like if you look at anybody's portfolio, there's some day traders who are completely out of the market at the end of the day. But most people, they don't sit there with 10 million, like 10 million is pretty ridiculous. But even like for me, I don't sit there with $50,000 buying power and $50,000 in the market. Money, like cash, is just, it's subject to inflation, and there's so many appreciating assets. You would likely stick that money either back into stock, real estate, like somewhere. It's not gonna chill out and be your 10 million. So I guess what I'm saying about that is, you're going to you're going to have to liquidate some asset. I mean, like if you're playing around with 100 million, 200 million, something like that, you're going to liquidate, whether it's a stock, a property, or something else. But stocks or bonds would be the most likely thing that you would sell, because they're very liquid compared to a like a house or a company or anything else that, like, hey, it's April, I need to now pay X amount, 200,000. Like I have to pay a pretty decent amount, and I don't like set aside that cash. Even cash that I have set aside, it's like literally still in something that's low risk. Like I'll put it in AT&T, so at least I'm gaining something, but I'm not just literally holding tens of thousands of dollars cash sitting there, because stock is so liquid. Especially now, it's not like you have to call your broker, set something up, wait for a check. It's like you just sell the stock, drop it into your account, and you're good to go. So I don't know. I mean, I get that perspective, like what he's trying to say, but I don't think that's correct. Let me see, just clarify, he's talking about realized capital gains versus unrealized. Yeah, and all that capital gains comes from property, businesses, and then if you're talking about that big of money, it's most likely going to be sitting, it's going to be managed by somebody, and that money is going to consistently move. I mean, unless you just stick it in the SPY or something like that, I just don't see $10 million be just chilling. George asks, how much technical analysis are you doing when it comes to making your plays? And what are some of the key things you look for? Little to no technical analysis. I mostly just look at the price history, news, what's coming up, and sometimes I don't look at it enough. Like with AT&T, for example, that was I'd sold some. Let's see, did Iron Condor, Iron Butterfly, and then just sold some calls like right when I was back to back with dividend, like ex-dividend, and then earnings, which did super well. So kind of hit me on both sides. But I basically, like, the reason that the majority of my plays are all Tesla is just because that's the company, like, first of all, company that I pay attention to the most. And I kind of and I like over the past year, year and a half, when I follow every single thing that they do and say, it's more like the news and events that come out with it. So, like Monday, like I've seen it enough to where most likely what's going to happen, I feel like Monday we'll have like a great earnings. I think we'll have a very good earnings. Stock will probably rip up like right afterwards. It's after hours on Monday, and then it's going to just kind of slowly go back down over a period of time, unless they announce something like absolutely insane. Like I was saying, like, oh, by the way, Tesla trucks are available tomorrow. But they've been more open with a lot of that stuff. They haven't had kind of that back pocket hidden thing that all of a sudden comes out. It hasn't been a while. I think there's been a lot more transparency the last 6-9 months. But I keep Thinkorswim up typically on my desktop and just look at that price action. But I'm not doing since I'm not making a lot of plays like dependent on technical analysis. I don't need it as much, and I think, and I also haven't put the time into it. Right, like I would definitely put more time into that if I was day trading, but 99% of my plays are all swing trades, or they're based on the news, or they're just long-term equity holdings. Let's see, what's in the way of this? We got too many things. Let me actually take a look at what we're holding now. We haven't looked at that in a while. These are quite a few plays we have going on. Let's get into our stocks. It's a lot of money worth of stocks. So you guys probably know Tesla, my number one holding in this account, my number one holding in my Thinkorswim account, my number one holding in TD Ameritrade, and then the only other accounts I have, like M1, I have more of a just kind of like a broad selection of them in there, but they're relatively boring. They're like, all right, you're up $30 for the day. All right, you're up 20. You're down 5. They're really boring, but they're very consistent, and they have some pretty good dividends. Are you holding any put spreads for earnings? What are your strikes? It's my first time doing put spread on Tesla. My strikes are 605, 600, expiration 21, giving me anxiety. I would not have, I'm not advice or anything, but I would have no anxiety at 605. I love that it's giving, I'm sorry. I love that that's giving you anxiety. Dude, I have, yeah, I am holding them. And so let's take a look. So these are all expiring next Friday. So I mean, I have some 680s. I think I have some 710s. Then I have some. Maybe I rolled those out a little bit. Yeah, so I have some couple 680s. Those are the ones that are like way up there, and then 630s, and then some 650s. So 605. And wait. Oh, and May 21st. Oh, these are golden. Like, I feel like May, if you were, and these are, yeah, and just make sure they're put credit spreads, right? I assume so. Even if earnings went poorly, and then there was some more downside. You're so far. I feel like you're so far out of the money, and it's seen so much good resistance before, like around that 600 level. It's having a tough time dipping below 700 lately. I know earnings are coming up, but yeah, 600s. I feel like a 600, 605. I feel like that's some free money. 620, 521. Do I have any 521s? I mean, I'm even playing the upside, so I've bought call debit spreads too on the upside, which I can tell you. Let's see, where are my? I have 795 800s, so I have 3 of those call debit spreads, and 890 900s. I have 11 of those. Like bought them for just a few bucks a piece. So those are definitely like YOLOs, not recommended. Probably gonna lose on those, but when it's like literally $100 into 10,000, you never know. Never know. You're in contact with Steve, and I keep bothering him. Oh, like you keep like uh-oh, what should I do? What should I do? What should I do? You have so much time. So because you're so far out too, even if next week like totally screws you, and everything moves against you, you'll still have like that following week. You still have all that intrinsic or extrinsic value that you'll be able to use and roll that out for quite a ways. Like, but I don't see like definitely by the end of this year. There's always a way. I mean, market could totally shift, but by the end of the year, I don't feel like there's any way it's gonna be below 700. That would be insane. And if it happened to dip down to those 600 levels, yeah, that's definitely a buy. It's a good opportunity. When did you open those, by the way? Like, did you get some? You should have got at least a couple $100 credit for those. Let me see where I'm at with 621s, though. By the way, some of these I have actually I have 2 SPY put credit spreads that I sold at the money. Those are like 30 or 40%. And then I have I have like 685, 675s for May 21st. So I can take those, and even if it dropped down to 600, as long as you react, let's see, we'll still have like almost a month left. There's still enough extrinsic value. You can just roll this out. So you're in a good spot for like, I assume it must be like one of your first ones if you're getting a bunch of anxiety with it, but you have plenty of time, and no matter what the reaction is, it's probably going to be an overreaction, whether that's to the upside or the downside. You have time to manage that thing. You have time for it to bounce back, and you have time to roll it if you need to. Oh, and George, let me get back to what you're asking. Like, what are key things that I look for? I look for price history. I look at price history, just like plain and simple, and I make a plays on stocks that I'm relatively familiar with, mostly Tesla because I'm the most familiar with them, but I have to know how they move relative to certain news. And then I just look for news and events, though. There's quite a few I don't play or don't post because they're so short term that I'll get in and out of, just because I'll see news and I'll have to like buy it and then sell it seconds later. For the most part, I don't day trade, but if I happen to be like just catch a tweet at the right time or news or something like that, I'll also play that. But the stuff that I post mostly, like when we had the overreaction when SPY came down, you guys saw those calls, I think, and those were like $11 into, was it like 90 or 100 and something? I can't remember, but it was like a 700, 800% gain in a day. So those are pretty cool. MF. Been using credit spreads on my long term on E-Trade. So far it's working out. Nice way to collect premium. Yeah. A covered, why am I are you using covered calls, credit spread, call spread? Do we mean to say, are you using like, or cash secured puts? My goodness, I have not had my coffee today, sorry. Jesus. Cash secured puts, yes. Dude, it's a good way to buy some stuff too. I was super hoping to get assigned on Palantir with my cash secured puts. And then do you also sell the covered calls on the other side? I think the covered calls are a great way to make money. I think things are so volatile right now. I'm having a more difficult time, like uh, the uh, the stock I want. Like I don't know that I have the patience to do the cash secured puts on something that I actually want. Like Palantir, I sold the 22, and I was super hoping to get assigned, but in hindsight, I would really just rather I would have bought the 100 shares. And then on the call side, when I go to sell the calls, I'm um, I'm always afraid to lose the shares because I know at some point they're gonna rise. So I've been selling my, let's see, what do I have for Palantir? Palantir, $27 calls, and I don't think it's gonna hit that. We have 300. And where's my other Palantir? Oh, I have a 21 and a half put. I'm up 86 bucks on that. Internet's slow. I sold that for a buck, $1.14. It's not bad. Like one day. I think I just moved that a couple days ago. But I want Palantir, and now it's already $23. I guess I can keep selling the 22, collect the premium, and then I usually take the premium collected and then buy the shares with it like right away. Because something I definitely want to own. I roll like I close it first and open up a new one. Same strike, further expiration. I saw your video closing and opening at the same time. Does it make any difference doing it separately or at the same time? No. Your end result is going to be exactly the same. I get asked that all the time too. It's just for me, it's like super easy. It's just a couple more clicks. It's kind of like a placeholder, I guess, if you will, too, for me. I I already know I want my collateral sitting in a put credit spread. Like I just know that. So I want to immediately be collecting like the theta decay, and I also want to kind of keep my place within the stock price and kind of move that laterally. So that's the other part of it. And I think, you know, most of us are all using like Robinhood or TD Ameritrade and Tastyworks. I think Tastyworks, um, I think it's all one cost. I actually don't even pay attention to the fees. But the only difference I ever thought of is if you have a brokerage that charges fees, like depending on the transactions, and I know all the structures are different, maybe you might pay a fee, like if you're paying a fee to close it and paying one to open it, instead of the fee to basically do that all four legs in one transaction. That was my only thought as to why it would make any difference. What other stocks do you do spreads other than Tesla? Um, Amazon, you're right. Amazon is more stable. What's up, Steven? How you doing? Nice wrench. um, Amazon, I mean, obviously, I super know Amazon. I have boxes sitting all around me, but I just don't day by day pay attention to their price action, and also I don't know. I assume their premium's pretty good, but probably not quite as good as Tesla's. Um, I just think Tesla's so dang volatile. It's like super good premium, so that's why most of them are on that. But as far as other ones, I have done. I think I did one on Amazon before. I think I lost on it, or maybe closed out early. But I have Apple. I grabbed some of those. I have some Apple. That's pretty low premium. They're a pretty slow mover. Um, but you can see, yeah, they're just like mostly Tesla and some spies. So that's all. That's all I have at this time. Tesla, Apple, and SPY. I should do an Amazon one. And it's hard because it's something that I really, really want to. I know I need things spread out, like between different market sectors instead of having like even kind of with Amazon, it's something that's going to move, or Apple, like they're going to. There's not a whole bunch of divergence there. Some. Um, Steve, because you're the only mod. That's how you got it. But I can't remember what I was saying now. But yeah, okay. So I do want to diversify, but the other ones just don't give pretty decent premium. I think Amazon probably does give okay. Yeah, more stable. And then and everything being equal, like the more stability that you have. So like I'll run them on AT&T, but it's not very much premium. So it's just not very much risk to reward. So like on Tesla, I can do them like 2 weeks out and collect 20%. Like I can get $100 on my $500 collateral. With Amazon, I don't know if that's happening. AT&T, like literally $500 collateral, you're probably getting $5 or something like that. You have a bunch of Tesla calls and puts. Oh, like you bought them? Did you buy a whole bunch for earnings, like super far out of the money, or spreads? I was thinking about that too, and then with Biden's wonderful tax thing, it just like messed me up. Oh, good Lord. It's like this guy. Spreads. Okay. I'm just scared on I've always been way more scared on the call side. I'm just waiting for that news to come out to where it rockets up, a couple $100 because we've seen it. Maybe it's settled down a bit, but man, it's scary. I mean, and it's basically like free. There's no more collateral needed. So that's what's crazy. Like you can open up a put credit spread with zero more collateral. You can open it up as an iron condor, same amount of money. So basically you can open up a call credit spread to go with it. And it's just free premium. But $950 on the call side, yeah. I have one $1,000 cash or stock covered call. That's all I have. And I was waiting to sell the other one to see what it does like Monday, Tuesday. But yeah, it's free. It's like you might as well do it because it's so far out there and it's so free with what you're already doing. But then the other part that always sucks for me is when I want to roll things out, then you have to, like, Robinhood doesn't allow you to do the 4 options where you take all 4 of them, roll them out. You can't do all 8 at once, so you have to like close the call side, roll the put side, and then open up another call side. I mean, it's not too bad. It's like probably literally 30 seconds worth of work. First world problems, I know. Do you run mostly Tesla? Credit? Are they CCs, covered calls? Monthly, 2 weeks, or weekly? I will generally run those covered calls like weekly, 2 weeks maximum, but like right now I'm a little bit shy about it just because we don't know what's going to happen at earnings. So like if it was normal time, I know no news is coming out, I would do them a little bit further, maybe like a month, but I'm still selling them super far to the money. I don't care. I don't want to lose my Tesla shares for anything. It's like, it might be my most prized. I like them more than, I have some other stuff that is worth more, some crypto, just because I've been doing it forever. That's worth way more than my Tesla shares, but I love my Tesla shares. It's like my prized equity that I own, more than my house. I actually do like my actual Tesla too. It's pretty cool. Do I get assigned if my strikes go in the money and the expiration is like 10 to 20 days far out? No, like I can tell you, it's always possible. Like it's always possible. Anything's possible. You can win the lotto today without even buying a ticket if you happen to find one. But no, for the most part, there's more value like that. Whatever you sold has more extrinsic value, and somebody else would rather sell it than to exercise it. Um, they rarely ever get exercised. The only time generally where you'll see it, you'll see something with with early early exercising is going to be like on a dividend stock, and it's super close, and it's also close to expiration to where it would need to be a slow mover, and there would need to be very much extrinsic value. But on something like Tesla, because it moves so much, um, that 10 days, like if you look at a call or look at a put, the same one, same strike price, but look at them 10 or 20 days. I mean, even like 3 days difference or a week's difference, that money is so big. There's so much more extrinsic value there that it wouldn't be worth it to the person to exercise. So I can say absolutely not, but 99.9, you never know when somebody has no clue what they're doing and they hit the exercise button. With how much money you started your account, how long did it take you to grow? Also share your risk management. So I started with $575 in this account, wherever, I don't know how I went to that. Oh, let's see, that way. to that account. And I've taken out, I've taken out like 50,000 or so. Let me see my all-time. So yeah, I've taken out like 55,000 out of the account, and I started with $575. Let me see my mic. I can turn it up a little bit. I don't know if that's gonna help. I went back. Yeah, it sucks. I bought a mic and then it crapped out like super quick. Let's see. So where was I? Yeah, exercising. 99% of the chance, just absolutely not going to happen. Too much extrinsic value left, especially in Tesla. But like where it's, if you're looking at like an AT&T that doesn't move much and there's not much time left, and there's, for example, a whatchamacallit, like a dividend that will be associated with the shares, that would be something that you might be exercised early on. Anything that pays like a really good dividend, and if you're like super close to the money. But yeah, that was definitely a question I had for a long time too, was whether or not like as soon as something is in the money, am I going to get, like I was freaking out the first couple just because you don't know what to expect. Yeah. Oh, how long did it take me to grow? So I started this Robinhood account, let's see, technically I guess a year and a half ago, but I didn't really start trading on it much until everything went down. So 13 months. Yeah. So it's been about 13 months. Yeah, and $575 into whatever it was, about 240 grand now. We were up a bit more before everything pulled back. And this was going through that huge crash with like everything down, which was just nuts. I was lucky I was able to take advantage of that with just the SPY dropping and I mean everything dropping, and then also take advantage on the upside to where everything was super on sale. So I made a bunch of money on the way down, and then made it on the way up with a lot of equities. I thankfully have a lot of money into equities now. Yeah, now I've just kind of find my happy spot selling put credit spreads, which I think are just awesome. Free money. It's free money and risk free and stress free if you do it like super far out of the money. If you're doing it close, then it's very stressful and you can lose a lot. Amjad. Amjad. Hello. Hi. I wonder if I'm saying that even half right. Were you initially aggressive with your Tesla strike price for spreads, or did you always stick to a certain delta? I've never stuck to any delta, like at all. I don't even look at it. Don't even. Um, it doesn't even matter. No, no problem. I'm happy to talk through this stuff. Like, um, it's not. I've answered a lot of questions like a lot of times, but I know like for me when I started out trying to figure a lot of this stuff out, I know I had like super basic questions, so no, totally love to answer that. But yeah, I don't stick to any delta. And was I initially aggressive with my strike prices for spreads? So initially, yes. So it's such a good conversation to have because they change and it has nothing to do with delta, and it was like my comfort where everything was. So initially, yes. And when I say initially, I'm talking 9 months ago, something like that, when it seemed like it was just going up and up, and in my mind it was just so crazy undervalued. um, I had like just no fear, and I would sell them like at the money, above the money, no problem. A week or two later, it was like way above there anywhere. Anyways, like if I would have got aggressive with debit spreads, I probably would have done even better. And then as the as Tesla started going like way up um, to 800s, 890s, I was so used to playing in that $400 or $500 to where that was getting scary, and I was like, and I was still selling them down. Like when it was hitting 880, I was still selling them down around 700, and those were getting scary because I could just feel the top heaviness going on at that point. And then of course we did come down. I think I started like when I was sitting up there for a bit, I started moving them up a little bit more, so I got less and less and less aggressive. Um, and then everything came back down, and here we are today. And when things were down, whatever, a couple weeks ago, I should have Thinkorswim up too, but when they were dipping below 600s, I was getting way more aggressive again because I knew we had earnings coming up. I knew it was like oversold, so I got more aggressive again. So it's, yeah, like I said, no delta, no nothing. It's price action, so there's no. Unfortunately, like I would love to give the ABC 1, 2, 3. Here's what you do. Here's what makes sense, but it's just me reacting to, I guess, like maybe just my feeling about the stock or whatever's coming up about it too. But the one thing that we definitely cannot control or predict is stuff like what happened Thursday with big tax change. That was huge. Or just overall market sell-off. Like that's going to make a bigger difference, and obviously Tesla was affected by that. Everything was affected by that. So most people did not do super sweet the first quarter of this year. We had a great fourth quarter, and I think we're going to have a good few months here, maybe 6 months running up, but we'll see. When you prefer to roll, how close to in the money and expiration? Great question, and that always changes too. These are like very fluid things with me. So this is, let's see. So when do I prefer to roll? I would rather roll like when I still have about 5 days left, but it all depends on how much money is left to collect. So if I have $1,000 spread, so I have $1,000 collateral, and I'm waiting 2 weeks to collect another $13, like that doesn't make any sense in my mind. Like why I put $1,000 on the line, because it could move against me, to only collect $13 or whatever, $17. Like that doesn't make sense. And as far as like rolling, like as it gets close to in the money. So when I was nervous about it, like when we were up at the 800s and that, I would roll as soon as it came even close to any of those strikes. So it didn't matter if I still had like 4 weeks left on it. Then like as soon as it started coming down, I would roll those out 6 months, 3 months, 9 months. Didn't really matter. I would just like push those out far enough to where I felt like the stock had time to rebound. I'm sorry that doesn't answer that like at all whatsoever for you, because it just totally depends on what's going on. So like for example, Monday, like we'll see how everything reacts. And I do have like those 680s, so they're only about 50, $40 out of the money. And if things happen to like tank, I'll roll those out right away, because then I'm not going to be super comfortable with them, and I'll probably just roll them out till we get closer to next earnings. So roll them out 3 weeks or so, or 3 months, excuse me. And also, when you're rolling them out from farther, like let's say you had them expiring a month or 2 months out, then you can roll them out and you can roll them down and still collect a credit. I'm bullish on NEO. Feel like I'm using it as my Tesla. I know it really drives me nuts. NEO drives me crazy. I want to go visit NEO in Shanghai. I'm actually been looking at that. October is when China, I think, is projected to open up to actual tourism. I want to go check it out. It's always nuts to me, like NEO, like when people say NEO is the Tesla of China, when Tesla's there, so Tesla is actually the Tesla of China. But it drives me nuts when I do an overlay on Thinkorswim of NEO and Tesla, like when they move and they're just totally locked, like side by side, the exact same movements, when I know they're both in the EV space, but NEO is a car company. I don't know how good. Some of their stuff that I think they think is cool and other people think is cool, I don't. But like Tesla is a EV company and a solar company and a solar manufacturer of tile company and an energy company, like a battery storage, their software company. They just have like so much more in my mind going for them than NEO, to where the like it seems like there should be some divergence there. I saw like a little bit a few weeks ago where Tesla was going up and NEO was going down, but most days 100%. Do you just like, why do you like, I'm curious for my education, like why do you like NEO? Yeah, why do you like NEO? I think they're another car company, but the chances of making it big, I mean, they probably have some great government backing. That would be the one good thing they have, but I didn't see anything like, oh my gosh, they've at least got this little segment under control now. How far out expiration do you prefer for your spreads? How much % profit do you aim for single spreads? You're asking too many questions. No, I'm sitting here talking to myself if you don't ask questions. So thank you for your questions. Thank all you guys for being here. Thanks for the likes. I got 3 of them. There's 14 of you guys watching it. Likes would be super cool. But no, I mean, I literally started posting stuff just because I wanted to BS about it, or help whoever I could about it. I'm not like, that's pretty much the only reason. And this is super fun to me. You guys make it like really good fun. Okay, so this is another thing that's changed. So for a while, when it was up, so I guess this is how it is. Like when it is super up and I feel like the price is maybe too far up and can come down, I prefer them 4 to 6 weeks out. 6 weeks ideally, and when I'm opening them up 6 weeks out, I'm looking for about 20% on my collateral. So a $500 spread, then I'm looking for $100 premium on that, or a $1,000 spread, and I'm looking for $200 collateral or premium on that. So yeah, 20%, and the reason that those have changed, so with earnings and because I felt like, okay, we're down in a little bit of a crater and coming back up, I started being way more aggressive with them. So several, like 3 months ago, I was not letting them expire or closing them or rolling them the same week. The maximum I would have was like 2 weeks out. So if they were expiring 2 weeks out, they were rolled, they were closed or something like that. I wasn't holding them the last 2 weeks, but that has totally changed. I'm getting closer to the price, and with much less expiration. I just want to be more aggressive with it, as my thesis is that it's going to go up at some point very rapidly. I think that's what we're going to see. I think we're going to see an unexpected breakout, kind of like there's just a giant wedge forming. That's about the extent of my technical analysis with it. I keep seeing the wedge breakout, and now it's just a huge wedge. We had awesome delivery numbers, awesome production numbers, and if earnings are as awesome as I think they're going to be, then it's going to just do it again. Like, it should rocket up. Hey, solar, tell me your experience about having Tesla solar for your home. Expense and overall experience, pros and cons too. I will as soon as I get it. So I posted that when I ordered it, which was what, literally 2 days ago. In case you guys didn't know, I ordered solar for my house through Tesla. I talked to one other company, and the pricing on Tesla, I'll tell you, is just like kicks everybody else's butt. The people I talked to so far, which has only been one person, he was like super awesome, super knowledgeable. I'm in a field that kind of parallels it, so I'm pretty knowledgeable about a lot of it, but there's definitely a lot to know. But he knew everything, super friendly. As far as like he's kind of an inside salesperson. That's my contact so far, besides online. Not pushy at all. Like, hey, just want to make sure you have everything you need. If not, that's cool. We'll just close out your inquiry. But so I just literally started it. It's going to be, I think $18,000 is the cost for a 12 kilowatt system. And that's after the 26% federal incentive. And that's like initially, so that's like what I'm asking for. But today I actually have to send some pictures over, send some bills over, and then they're gonna design around that and my roof and all this stuff. So we'll keep on going from there. I totally would love to document every stitch of it, because I think it's gonna be super awesome. But that's as far as I've gotten so far. Do I have any long-term Tesla? I sure do. I have in this account, can't see that. I have 202 shares in this account. I have other stuff too. I think I have Tesla in every single account that I have. Yeah, every single brokerage I have Tesla. Besides, I don't actually own shares in my Tastyworks, and I don't have it in like my dividend pie, but that's it. Thanks for the like. Z Boo Boo. Alright, Tesla's better than Neo for sure, but the battery swap service is such a money make, especially now partnering with the biggest gas station in China. When better battery development arrives, you can just switch the battery pack to the new long range rather than buying a whole new car. That's the thing that I think a lot of people are banking on being very cool, but I don't think it necessarily is. And that's as somebody who drives one. So it's definitely way different. I feel like the perception is different from somebody thinking about buying an EV and someone who drives it. So for me, number one, I never, like, I can't say never, 99.5% of the time, I never charge outside my house. I leave my car, like, imagine if your gas car, you had a full tank every day, right? Like, you start off the day with a full tank. It's very few times where you fill up like twice a day or something like that. You'd have to go super long trips. So almost all the time, unless I'm going like out of state or super far. So I've got like 25,000 miles on it or so, and I've charged outside of my house 3 times, and they were going like up to the mountains twice, and maybe over to like Idaho a couple times from Seattle. So, yeah, it's just, and then I don't know how long that battery swap thing takes, but when I did go outside, I can tell you charging, because it charges at over 1,000 miles per hour. I'm basically sitting in my car, plug it in. You gotta get up and move your legs anyways at some point if you're driving 200-300 miles, and charging time is like 11 minutes or 15 minutes or something like that is enough to get you going. So the swaps, I also don't know 100%. I assume that you give your car to somebody and then they drive it up, swap it. Most people don't want to have other people in their car. I would rather just walk up, plug it in. I don't have to wait in line, do anything. Like, literally drive up and plug, and that's it. And then I walk around, go use the bathroom, get a coffee, or sit and watch Netflix or whatever, and that's it. So that's my take on it. I mean, it's kind of the same thing where people worry about their range when they don't have it. Like, if mine had 150 miles, it would only 150 miles, which is half of what it really does. That would probably be fine for almost any occasion, right? That's still a couple hours worth of driving, and I do outside sales, so I'm all over the place. But I think most of the time, and then 200 miles worth of range would be fine. What do I think of CCIV? Okay, CCIV. I like. I think they're in a smart area. The fact that they're going after like luxury, which, having driven the Model S, it's Teslas are all luxury cars, but it's not luxury like a Lexus or Mercedes. So I don't feel like they're a competitor to Tesla, so that's smart. But unfortunately, like Mercedes is, and I don't know where that Mercedes that just came out, that thing looks gorgeous. Like, I think they have a slim chance of making it. It's definitely possible. But if the new Mercedes is as gorgeous as it looks, and I haven't had a chance to like watch everything about it, but if it is, that's going to be their competition. And they're kind of like a smaller niche thing. They're going to have I think they have a really big uphill battle for years and years and years. I did look through their whatchamacallit, I want to say like their earnings, but it's whatever they put out, going like, here's what are their financials. Okay, that's what I'm trying to struggle for. So I did look through their financials, and that was when they were saying they were going to deliver cars this year. So they're not even going to be making a dime for years, and it looks like everything has to go perfectly for them. So nothing I'm bullish on. I wish them like super good luck, and hopefully they just like push the innovation. But I think that's like the best hope for them. They're financially, they're going to have a tough time when you dive into it. And their management team is huge. Like, it is gigantic for the amount of cars they're producing. And most upstarts really need to be slim and lean, and that doesn't look like them. So I hope they do well, but nothing I bought. I think I did own them at one time, and I sold them once I do this sometimes too. I'll look at a stock and go, all right, that seems cool. Then I'll really dive into it, look at their financials, think about what their mode is and go, yeah, no, not in my long term. Jesus, no, my name is Jason, but nice to meet you. Let's see, if you're just starting with Tesla spreads, what would be your play on Monday? I would not make a play on Monday if I was just starting, with Tesla spreads. I would definitely wait till whatever happens Monday and Tuesday and find out what that reaction is. I wouldn't do jack nothing on Monday. I don't think I'm going to be doing anything on Monday. Like if it happens to rip up like right pre earnings, I'm still not going to do anything. The only thing I'm going to be scared of is my $1,000 Tesla call that I sold against my shares. But yeah, zero. I'm not going to do anything. And when I did, like if I was just getting started, I would wait till after earnings, and then I would start far enough out of the money to where you're comfortable, nice and far, and then far enough like time wise to where you have enough extrinsic value to roll it if you need to. So I would start out with like a 6-week out, wait far out of the money, and just see how it works. I don't know what your experience level with spreads in general are, but it's whatever stock you've traded times like its volatility. It just makes it nuts. I know you probably answered this already before, but what's the real on full self-driving in your experience? I love it. I use it every single day. Um, it's not full self-driving. It's autopilot or the beta. I don't have the beta, but I have the autopilot, which gets you the on ramp to the off ramp, switches lanes. So like the real thing from somebody who drives a lot, like I don't think it would be valuable if you go to the office 2 miles away or to the grocery store, but I still use it on my little city streets. Um, but the big thing is like I commute, I drive all around, and depending on where you live, if you if you're like somebody who gets stuck in traffic, and I'm in Seattle, we got lots of traffic, and it takes it out of you. It's like super draining, and to just hit that autopilot and not have to worry about anything, it is so much more relaxing. Like I feel so much better and less stressed when I'm driving out of the pilot. I think it is amazing. You get to know kind of its personality, so you get to see like when it's learning, like where you know it's going to have problems. Like there's a couple spots where I know it's going to have issues figuring out this, so I'm already prepared for that. But if it's going down the freeway and changing lanes, man, it's 100%. And as every software update comes out, which is every week or two, it just gets better and better. Like the control is just better and better. So I love it. I think it's awesome. Yeah, super glad I paid a lot of money for it. Do you hold spreads until almost all premium earned, or would you roll out at 50% or more of the premium earned for a couple more weeks? So I hold until almost all the premium is earned unless I'm uncomfortable with the strike price relative to the underlying. That's the only time I'm rolling it out any sooner. Like I'm like, all right, it's coming down. I'm outside of my comfort zone. I still have this extrinsic value. Let's throw it down the road to get whatever choppiness out of the system, and then I can deal with it down there. If you had 20K, would you put it on Bitcoin or Tesla? Can I split it? If I had 20K, I do have 20K. So, but I own both. If I had to pick just one, Tesla. Because by owning Tesla, you own Bitcoin, because Tesla owns Bitcoin. Tesla is actually doing something good for the world. Bitcoin is doing some cool stuff, but you own both by owning Tesla. And there's intrinsic value owning Tesla as a company. Bitcoin still has no intrinsic value. It's super cool that it's super far up, and thankfully we made a lot of money on it, but there's still like you can't do anything with the Bitcoin. It's like water, you know, water is cheap, but at least we can survive with water. An apple's cheap, at least we can eat it. You know, gold has value manufacturing things, but a Bitcoin isn't even a physical asset. I think it's here to stay, and I'm bullish on it. But it still has no intrinsic value. It's become more valuable because of the adoption of it, pretty much. I mean, the same thing like a dollar, you know, paper dollar. It only works because we believe it. We believe that sometime down the road we're going to be able to take that piece of paper and exchange it for something else we need. But Tesla, yep, 100%. Very true. I don't own a Tesla yet, but one day I will. The swap takes 5 minutes, and the car goes into battery swap mode. You stay in your car the whole time. Yeah. Yeah. I mean, that makes sense. As far as, I don't know how much like overall sense it makes, but yeah, I kind of like owning my own stuff, and yeah, like I said, 99.9% of the time I'm not charging outside of my house, so I don't know what size packs they have. Yo, finally caught a stream after work, driving home now. Good luck with everything. Thanks, Alex. Yeah, I know, dude. I see you comment all the time. I don't think I've seen you on the stream yet, or it's been a while. Since earning is Monday after hour, any spread you plan on doing Monday morning? No, I had some. I don't know. We'll see how Monday opens. I'm just gonna hold everything that I have right now, kind of the way it is, just because. I don't know, the weird tax stuff. I think a lot of the market's kind of overpriced right now, so I'm pretty happy with where I'm at. I'm satisfied with my my upside. I'm satisfied with it, the amount of plays and positions I have in it, and I'm not playing anything or ensuring the downside of it, because from their production, from their deliveries, from their price increases on not only their solar side and their car side, I don't see earnings being bad at all. Thanks for your insight. Thanks for the questions. Thanks for being here, man. I appreciate you. Thanks. You're going all in with Tesla this week. All in, like all your 20K. I don't think it's a terrible thing. Oh, well, I think you were saying all in buying shares, right? Not all in with credit spreads. I hope you're just like all in with the with equity. Like, I would be happy to own 20 grand worth of Tesla. I don't think there's nothing like, and if you're to go, like, I don't think going all in at one time is. I would space it out, right? If I was like, okay, I'm not invested, I have 20 grand here, I would probably just divide it. I would divide it by 6 and put a couple grand every month in, like on the first, just kind of like clockwork, just to make sure you kind of get an average. You do risk it, of course, going way up, but okay, buy shares, boom. No IV crush when you buy shares. But yeah, and I feel too like, okay, if you're sticking 20 grand in, I assume you're gonna hold it for a while. And I'm not saying, you know, I don't think Tesla's necessarily going up Monday. It could definitely skyrocket, but I'm looking at, you know, 3-4 years down the road, it's a $3,000, $4,000 stock. I mean, it's probably going to split again, and you know, we'll have a ton more shares then. But so I don't even see any difference. Like, in one of my accounts, I bought a couple hundred more shares at six something. Can't remember, I had posted it when I bought it, but I don't feel like there's any difference if you bought it at 800, 700, 600, 500. In 4 years from now, you're just going to be super happy that you bought like even one share. What is MSTR? It's driving me nuts. I've heard it like, I feel like it's something I should know. Oh, are they they're miners, right? MicroStrategy. They're basically like a proxy for owning Bitcoin. Is that right? I thought. It's a, it's like, yeah, I keep hearing master, and I don't know what it is. MicroStrategy, or they own a lot of Bitcoin. Oh, it has to be. That's funny. I always love that. The people also own Riot, Coinbase, Square, Marathon Digital. I'm not familiar with either, but I assume it's somewhere along those lines. Boy, so wait, Marathon Digital, they were like $1 into 50. I don't even know this company. What do they do? Digital asset technology. Oh, so they're miners. Of course. Master. I love I love the meme stocks. I think it's so cool. I was talking about this with Logan yesterday, and one of the things that I love about the stock market, like I'm relatively new compared to a lot of people. Um, like even guys who've been around forever and should be like total market masters. Warren Buffett, right? Like he's I don't know however old, been doing it forever and ever, and then like you think he knows it all or has seen it all, but then he's never seen the like the AMC's or the GameStops. There's something always brand new. It's just crazy. Oh, nice. I even forgot. I had a 690 700. Awesome. Sounds like a spread I would have. Glad you made some money. I just bought naked calls on Clove. Yeah, that's the other meme. 650 on my put credit spreads. Dude, I like that. I like 650. Yeah, that magic number for me has been 660 for some reason. Like, I don't know why. But then I keep going above it anyways. Thinking of some 670, 680. Yeah. Yeah. I mean, Monday, right? We'll find out Monday evening. I'd love to take a stab at it, but I'm just sitting with whatever I have now. I'm not gonna actually. I mean, the IV, the amount of value you should be able to get out of it on Monday should be pretty good pre-earnings. So I think if I was to open up something, it would have to be in the morning because it's got to run up during the day. Um, it has to run up during the day, unless overall market is just like really upset. If Tesla drops on Monday after earnings, should we expect the market to follow along in the days after? No. No, it's like pretty diverged from overall market. It's not like crazy heavily weighted. I mean, if it drops, it's just not. It's not going to drop that much. But pretty decent divergence from the rest of the market, I think, with Tesla right now. Do I post my spreads? In my videos, a lot of them, but not all of them, just since I work a full-time job and sometimes it's just like between things and I see like a little drop and I'm just like, boom, let's open one. Or I go to record doing it because I do like posting as much as I can just so I can talk about why I'm opening it. Like, um, not so much just so you could go, okay, here's the play, but kind of like why I'm thinking what I am at that time, just to um, see what my mindset is. Like, hey, I'm opening up this up here because I have a lot that are super safe, and I don't mind taking a little bit of risk. Or sometimes, you know, they're like, this is totally YOLO, and don't do this, or this is super safe. Like I have $1,000, and I wanted to do something. Like I opened up, I didn't post it, but I opened it up one yesterday, or a couple, yeah, maybe just even 2 days ago, expiring yesterday. Because I was like, well, I have $1,000 here, might as well have it make at least like 20 bucks. Just curious what you will. Oh, what do I do? Oh, so I'm in outside sales, and have been for a long time. So I do some building science stuff, but yeah, just been doing it forever. That's what gets me driving. That's what got me driving a Tesla, because I drive like 30,000 miles a year around Seattle and all that stuff. So that's easy to justify for me. And it also gives me the time. It's pretty nice because like the owner of my company is super awesome, so it gives me flexibility. Most of the videos I make during the week, I'm just like between appointments and stuff, so I'll go visit maybe 3 to 5 at max people a day, or different like builders or whatever, and then I have that freedom. I need to catch up on some work this weekend, so once in a while I'll be working on the weekend, and yeah, so that's what I do. Been doing it forever. Quite love it. Until, I don't know. I don't know until when. I'd rather just do this. It'd be super cool. You got stuck in Mara at 56 a share. Is this Mara? Oh, this is Mara. Oh. Oh, you like you top ticked it. Holy crap. You're good. Just do the opposite of what you're doing, and you'll be good to go. That sucks, though. That super sucks. I like, the fact that you're able to admit it, though. That's super awesome. I mean, because that's like, when you totally fail on a purchase, that's always the hardest thing to admit. When you're just like, yep, I bought this. Yep, bad move. And it went down ever since. Like somebody who bought Dogecoin at 48 cents or whatever, probably never recover. I don't know what Marathon's like outlook is. If it's something that you expect to like go up again, I don't even know what their earnings are based on, or was it totally just a pump because whatchamacallit, because Bitcoin. So long covered call. Oh, dude, why don't you just like, since it was so crazy high, can you just move them down? Like move them down to like 60 strike price? What? Wait. But Mara, okay. So wait, you sold a covered call on the shares that you bought, or you'd sold a cash covered put at 56, and then you got assigned. Oh, okay, got it. So you're just gonna, are you getting rid of them, or you're just gonna keep selling calls on them, like have the money? That's what I keep doing with BNGO, because I like from that day I realized I was like, I don't even know what this company does really, and I just started selling covered calls and like super close to the money. I think those and United Wholesale Mortgage too. Like I don't care. I just want to get rid of them. Just let you get pretty good premium, so that's cool. Boy, where are we at? We're at an hour 15. Holy smokes, time has flown. Well, guys, um, I think I'm about to take off for the day. Did appreciate you. I gotta go get back to. I gotta get back to like you know house stuff and all that stuff, dude. Appreciate all you guys. Like I'm super surprised how like I don't know how positive everybody is and encouraging. I super appreciate all you guys, all your support. Like I know there's got to be a troll once in a while, but they just don't come out that much. So and it's pretty cool. I think we all kind of have a common goal. We're all like looking at the market, wanting to make some money somehow. So and I super enjoy it. Enjoy you guys showing up. Thank you so much for showing up and giving up part of your Saturday. Love you guys. So I'm gonna go ahead and end it here. We'll definitely. I want to. Let me see. I might want to. I want to see Monday. Do I have time? Monday after hours. Dude, I would love to live stream the earnings report Monday. That'd be awesome. And then I also maybe we can do some stuff during the market next week. I have my second vaccine, so I'm taking a couple days off of that because everybody's been kind of like knocked out. I just don't even want to bother working if I'm gonna be getting my butt kicked. You're more of a spy guy, probably SPX. Yeah, probably smart. All right, guys. I'm gonna get going here, so I'm gonna end it here. But love you guys. See you this week. See you next weekend. Maybe see you during the week.